Hello, good evening, ladies and gentlemen, traders and investors. Alex here from MarketWise Asia. Thank you for tuning in to this Facebook Live and also on YouTube as well. So if you can hear me loud and clear, please say a hi to me in the comments or in the chat box. And if you are watching this on YouTube, okay, please give me a like and also subscribe to our YouTube channel. It just takes less than 3 seconds for you to just like and also to subscribe as well. So say hi to me in the comments. I'm friendly, okay? I won't bite, okay? And also tell YouTube and also Facebook algorithm that you want to see more of our content in the future, okay? All right. So last week I did not do my live stream because we just held our market insights trading festival, okay? Last weekend. So I didn't do that and I do the live stream the following Monday. So do you guys miss me or not? Hey, by the way, okay, okay, let me take a look at the comment first. Okay, let me take a look at comments first. Okay, I saw Kelvin say hi already. Juki, okay, Don, Dave, Gilbert, Ray, Mark, okay, Ken, Geraldine, Nevin, WL, okay. All right, so for those who actually attended the IG Market Trading Festival, okay, 1 week ago, last week, okay, please say a hi to me, okay, in the comments, okay, not say hi, say type 1 in the comment or just type yes in the comments, okay. If you attended the IG Market Insights Virtual Summit, just type yes in the comments. Right, and if this is the first time, okay, after the trading festival, you are watching me, okay, type number 2 in the comments as well. Okay, if you attended the Market Insights Market Insights Trading Festival, okay, type 1. All right, if it is the first time, okay, you are watching me after the event is over, all right, the live stream here, just type 2 in the comments. Pei Wen, you are not the first time watching me lah. I mean that after the event, the first time, you never heard of me before. This is the first time after the event because somehow you get to know through our event, okay? And then you attended the event. After that, this is the first time you heard about me watching this live stream. Just type 2 in the comments. Or maybe I'm confusing you guys. Okay, I saw some of you, okay, Jean Yo, hey, how come you never come and say hi to me? You're also the SVI members, right? Okay, all right. Okay, so anyway, thank you for tuning in. Okay, please give me a like and share. So let me just share my screen right now. Okay, CK is asking, okay. Job growth average 174K in a year and the job much stronger. What's the impact? Okay, later I'll go through what I think is more important now. Okay, later I'll go through. So today's session, it is more about the macro view, not so much into the technical. You did, hey, Gene, sorry about that. I think I forget already. sorry, because I met too many people already. Okay, sorry about that. Okay, it's not meant on purpose. Okay, all right. So Jimmy, okay, thanks so much. So let me do the sharing. Okay, let me do the screen share first. Okay. All right, so you guys can see, right? So let me try to zoom in a little bit bigger. You guys can see, right? Okay. So as usual, all my usual social media handles. Okay, please like and share if you could. Okay, and all right. So before I go into today's session, right? So just want to let you know that this coming Thursday it is on the 20. Is it Thursday? Is on the 29th, right? Yes, on the 29th of August, this coming Thursday, I'll be doing a special, okay, webinar. All right, so to unlock the power of seasonal trend for consistent trading success, okay. All right, so this is on seasonality, okay, using seasonal trend. So if you are looking to achieve a more consistent trading win, right, seasonal trends, okay, might be the key. So for those who are very new to MarketWise Asia or to Alex, right, so seasonal trends, okay, are predictable patterns in financial market that occurs at specific time of the year. So every single year, they tend to repeat, okay? So by analyzing historical data, you can identify the trend and make smarter trading decisions. So in this discovery webinar session, I'll share with you how to harness the seasonal pattern for profitable trade, okay? Make confident decision with data-driven insights, and how to outsmart market condition with predictive strategies, okay? So please be rest assured that there will be case studies and there will be trade ideas as well, and knowledge that you can take away. All right, so let me share the link. If you are totally new or haven't want to know more about seasonal trends, seasonality, then I welcome you to join this webinar. For those who are already seasonal vantage insiders, right? Okay, you don't have to join the webinar because a lot of things you already know already, and a lot of these true ideas are already shared with you also. But rest assured, for those who are not inside seasonal vantage insiders, okay, this is not going to be just sales pitch and sales pitch and sales pitch. And there are things that you can take away, there are knowledge that you can learn from, and also case studies. All right. So this is going to be an insightful webinar session. All right. So let me post the link in the comments once again. Okay. If you are keen to join, please, not keen to join. I think you should join. Okay. You want to know more about seasonality, how to use it for more consistent trading success, you should join. Okay, I'll post the link in the comments. All right. So this week, as I mentioned, right, for this tonight session, it is more on the macro view, not so much on the technicals and the seasonal. The seasonal, things you can actually attend the webinar. I will share more during the webinar during this Thursday session. All right. All right, so for the economic data this week. So before I go to that, let's go through the economic data for this week first. So this is every single week I'll go through with the audience. Okay, so this is for this coming week. All right, so Tuesday, tomorrow, there will be the consumer confidence, and then Thursday, the prelim GDP quarter on quarter, then on Thursday, unemployment claim. Okay, unemployment claim very closely related to the unemployment rate. Okay, later I'll share with you why I think this is a bit of concern if we are heading into recession or not. Okay, and then there's on Friday, there's this PCE price index. Okay, all right, this is not so much of a concern right now, whether on the inflation, because I know inflation, it's like the yesterday thing already, yesteryear thing already. Yeah, it's not so important right now. It is coming down. Okay, all right. So of course, by now, okay, I didn't actually write this, but by now you should know that Jerome Powell during the Friday and Saturday Jackson Hole Symposium, they already mentioned that it is time, okay, the time for them to adjust the rate. Okay, how many of you know this news already? I think most of you should know, right? If you know this news already, just type letter Y in the comments, just type yes. Okay, basically, okay, Jerome Powell, the Fed, it is telling the rest of the whole world that they are ready to lower the interest rate right now, to have an interest rate cut already. Yeah? So I think all this you guys should know if you are following the market. So right now, I think it is nearly 100% sure. I wouldn't say 100%, 99% sure. Okay, there should be a rate cut in September. If they do not have a rate cut in September, then this will be a surprise, okay, to the market. Okay, that could cause volatility. But nowadays, the Fed, they don't like surprises. Okay, they tend to preempt the market. You are very so-called mindful, aware, okay? Because actually just now Jenny got a headache. So yeah, she was not feeling very well. So she actually slept earlier. Okay, all right. So this is the rate cut. So let me go through the rate cut for you guys first. Okay. So the next FOMC meeting on the September, about 23 more days. So you can see that the interest rate right now, it is about 5.5%. Okay, 5.25 to 5.5%. All right. So you can see that there's a 67% chance that the Fed will cut the interest rate by 25 basis point. Okay, BP. Okay, 25 basis point, which is 0.25%. And then there's a 32% chance that it will reduce the interest rate by a 50 basis point, which means that, okay, it's like 99% sure that they will cut the interest rate. It is just don't know whether it is, okay, 25 basis point or 50 basis point, okay. How much do you think that the Fed will cut? Okay, if you think it is 25, just cut 25. If you think it's 50, just type 50 in the comments. Okay, all right. So I think actually this is actually not that important. Okay, the important thing, okay, most likely they will cut. Okay, all right. So I think by now you should know. All right. So what are the sectors will benefit? Okay, what are the sectors that can result in Fed not cutting rate? Okay, to be honest, they never really say that they will cut in September, okay, Juki. But as I mentioned, right, okay, they don't have to surprise the market, and somehow they think that, you know, the fundamentals of the economy suddenly turn very good within the next 23 days. They might not cut the interest rate, but again, okay, based on what I see in the market, it seems that they know that the economy, okay, is like projecting that it is not going to do so well. That is why, okay, they are ready to cut the interest rate right now and to preempt the market. Okay, if they don't want to cut, meaning that within the next 23 days, they think that, you know, somehow the economy is like, you know, becoming very good again. Okay, later I'll share with you why the economy might not be so good, okay, underneath the surface. Okay, but again, nobody can predict whether there's a recession or not. Okay, all right. So previously, the market, this is the Nasdaq futures. Previously, remember so-called the Black Monday, early August, when the market had a nosedive, okay, because there was a fear, somehow there was a fear of a recession. No, the market keep talking about recession. So that's why the market so-called there's a fear and market have a sell-off. That's what the media was telling us. Okay, all right. So what are the sectors that will benefit from the interest rate cuts? Okay, what are the sectors? Maybe you can name some, okay, to share with me your understanding. Okay, any sector? Okay, I think some of the sectors that will benefit, okay, it is the real estate sector. Okay, the real estate sector, because a lot of these sectors, like for example, real estate, okay, property, all this, they are highly leveraged, and they can reduce the so-called, if they can reduce the borrowing cost, because if you reduce the interest rate, you're essentially reducing the borrowing cost. So all these are highly leveraged, okay, industry, real estate, reduce the borrowing. It tends to, by right, it should benefit the real estate lah, okay, all right. And then also the financial sector, XLF, because, you know, bank, okay, they thrive on the interest rate, whether it's up or down. If you know, so if there is a lower interest rate, people are more interested to borrow money, lower the interest, lower the borrowing cost again. Okay, then, you know, that could make their business better. So, you know, by right, financial sector should increase, should benefit as well. And then there should be also some called it utilities. Okay, because utilities, they tend to be very dividend consistent. Okay, so they tend to give consistent whether it's in good economy, in bad economy. Okay, and it is also acting as a proxy, because, you know, when the interest rate is reducing, right? Okay, the bonds are not so-called, the bonds are not so favorable, okay, are not so attractive. You know, some of these investors, you know, might move their so-called funds into the utilities sector, in utilities industry, utilities stocks, because they tend to be very dividend consistent. Okay, because right now, you know, interest rate not so attractive, they plow back into the stock market. Okay, right, these are some of the few lah. Okay, and of course, XLY, the discretionary, because, you know, you boost the economy, people are spending and such, because lower the borrowing cost again. Okay, and then maybe also XLI, because it is a signal that, it is again lower the, again, a lot of these things lead to the lowering the borrowing cost. Okay, so increase in demand for industrial goods and services, they can produce more and such things. So it seems like there are there are like, in theory, like many sectors and industry are benefiting now, okay? But again, I need to remind you that, okay, all these are, okay, are textbook knowledge, okay? In theory, it should do like this. In theory, by right, when the interest rate reduce, it should do like that. It should do like this. It should do like that. But again, as I mentioned a lot of times during my Facebook Live, all these the market is very so-called dynamic. It doesn't mean that, you know, in theory, this thing will increase, it will increase. So we still need to watch the price action. But okay, common sense, logically, these are a few of the sectors should be benefiting now. Okay, all right, Ken. Okay, but again, don't put so much into this textbook knowledge. You still need to watch the price action. Price action is still, okay, the number one thing to watch. Okay, can you type P in the comments? Price action, meaning how price, okay, moving, okay, in the coming weeks or months to come. All right. So before I go into that, before I go into key level, okay, not so much into technical. So certain things to share also. So beware of the September and October. So this was taken from the where is it? Okay, this was taken from the, let me show you the data over there. This is taken from Carson Research. Okay. All right. So from Ryan the Trick. Okay. I know that, you know, it seems that August is doing well, okay, which previously I anticipated that there could be some correction, but it did not. So, you know, again, this is like performing like clockwork, okay, during the election year. So during election year, August tends to perform pretty well as well. So as you know, this November, it is the election year. Okay, it's the election already. So between Kamala and also Donald Trump. So, but based on historical data, 1950 to 2023, right? Okay, September and October, okay, it tends to be the weakest month. So far, it is playing, okay, according to the playbook. October, it is pretty bullish. Okay, September, October, okay, historically, it is not so good. So you need to be more careful. All right. So later I'll go through the technical of the charts, okay. But right now, not so much into the chart and the technical thing first. Okay. I just want to share with you guys, okay, just now I mentioned about the recession thing, right? Recession. So people are talking about recession, the media talk about recession, okay? So do you think there will be a recession or not next year? Is there a recession next year? If you think there's a recession, just type R or just type yes lah. Okay, if you think there's no recession, okay, next year or so, just type no in the comments. Okay, and what happened typically when the Federal Reserve cut the interest rate? What happened, okay, to the stock market or the economy? Okay, I can see that, you know, CJ say no, CK say no, yes. A lot of people say no. CJ say yes. No, CJ say no. Okay, sorry. CK say yes. No. Any other things? They are close to about 200 people in the live stream. Yes or no? It's just a sentiment. It's just a sentiment. There's no right or wrong. I just want to know your sentiment. I think mostly say no. I think mostly say no. Thankful say yes, coming very late. Okay. So before I go into that, okay, just want to share with you this link. This is the St. Louis Fed. This part of the Fed. Okay. The Fed fund rate. Okay. The Fed fund rate over there. The Federal Fund Effective Rate. So of course, right now it is at about 5.25%, 5.33. So you can see from the chart over there, this is from 1950, okay, to until now lah. Okay, the shaded gray area here, it is the recession. Okay, recession. So you get the idea, you get the drift. Okay. So normally what happened when the Fed reduced the interest rate? Okay. So we can see that in recent years, okay, let's don't go back into the 1950 to 1970s, that era, because those era is a totally different kind of economic condition, okay, economic climate, it is totally different. So in the modern, okay, from 1980 plus, you can see that, okay, typically, okay, let's say from here, okay, you can see that, after the 1985 onwards, okay, when the Fed reduces the interest rate, cut interest rate, okay, subsequently, okay, there will be a recession. You can see that it cut, then there's a recession over there, all right. And then, in 2000, of course, the dot-com crisis, after the interest rate hike a little bit higher, after that, the reduces the interest rate, okay, then there is a recession, okay. Some of these things you might know already, or you might have heard before already, okay. Just bear with me, just going to repeat certain things that will lead into other things, okay. So again, after that, in 2006, okay, before the global financial crisis, okay, it's stagnant. After that, lower the interest rate, okay, and then after that, there was a recession. Of course, in 2020, there is a so-called the COVID-19, but prior to that, it also started to reduce the interest rate. So again, okay, so right now we are starting, okay, we are on the right-hand side. We are on the right-hand side of the curve right now. Cannot see, never mind, okay. We are on the right-hand side of the curve. Okay, it is going to go down like that. But again, it is not always the case. It is not always the case. A lot of times, but not 100% of the time. Can you see that? You can see that in 1995, okay, when the Fed increased from January 1994, okay, to February 1995, okay, after that, they start to lower the interest rate, okay. The market, so-called the economy, did not really go into a recession, okay. It takes some time, okay. It takes some time. But you can see that a lot of time it tends to do like that, okay. But again, when something that is so heavily watched by the market, okay, it might not happen also. Like for example, like Jen Lee, okay, the founder said this time it is no longer accurate. Something's pretty similar, okay. It is also like pretty similar to what actually Bini said during the IG Market Insights Trading Festival, okay. At that point, during the so-called the Monday crash, okay, people are talking about the recession, right, okay. And she immediately said there will not be a recession because everybody keep harping about the recession. It is so closely watched, okay. Everybody is talking about that. Even so-called that time when Bini said that, even I think his part-timers, right, or even like the VA, virtual assistant, talk about the upcoming recession. He also talked about upcoming recession. That caused Bini to be so certain that, at least within the next few months or so, the recession will not come, because everybody is talking about that. The more people are talking about that, okay, the more it won't happen. So the market just somehow works something like that, okay. The more people talk about that, the reverse will happen, okay. Can understand or not? If you understand, okay, just type, okay, yes in the comments, just type yes, okay. But having said that, okay, this is just one example over there, okay. The so-called, I just want to let you know the certain things over there, okay. This is the Fed Fund when they actually reduce the interest rate, okay. But again, okay, when do the so-called the US announce the recession, okay? It is not by the so-called the data say that when there's a 2 consecutive GDP value, okay, then you'll be a recession. It is not. The recession has to be announced by this so-called institution called the NBER, neighbor. I think it's neighbor. Okay, NBER. Yeah, the National Bureau of Economic Research. I think maybe last year or so I talked about the neighbor also. It was in Singapore context, okay. I call it the NABE, okay, the NABE, NBER, NABE. So it has to be announced by the NABE, okay, NABE. All right, so it's not that, say negative 2 consecutive for GDP, you'll be recession, okay. It has to be announced by the NABE. Okay, all right, and of course, like Juki is saying, the 10 years minus like 3 months or 2 years, so it's like crossing above the zero again. So these are all the so-called potential indicator that might signal a potential recession, okay. But the thing that I'm actually watching, okay, is actually the unemployment rate, okay. The thing that I'm actually watching that is unemployment rate, okay. So the unemployment rate, it is actually creeping up in recent months, okay.
is in recent months. Okay, not so many people are talking about the unemployment rate. So you can see that the unemployment rate, okay, I'll post the link here. Yes, Jen say NABE is easier to remember. Yes, NABE, okay, NABE is easier to remember. So the unemployment rate, okay, so again, just take a look at what happened previously, okay, all right, since the 1950 or so. Like, okay, a lot of times you can see that, okay, when there's an uptick in the unemployment rate, okay, shortly the recession happened. When there's uptick in the unemployment rate, the recession happened. Uptick in the unemployment rate, okay, the recession happened. Uptick in the unemployment rate, okay, the recession happened. Uptick in the unemployment rate, okay, the recession happened. Uptick in the unemployment rate, recession. You get the idea, right? Okay, you can see that, starting at a low, okay, then starting to go higher, then recession. At a low, then starting to go higher, okay, and then recession. At a low, okay, then starting to go higher, a recession. At a low, of course, this is COVID lah, okay. But right now you can see over there now, is it the unemployment rate, as you can see from here, okay, is it going higher or going lower? High or low? High. H, if you high going higher, just type H. Going lower, just type low. Okay, I think you all know the answer lah. I just wanted to have some engagement with you guys, entertain me a little bit lah. Okay, high or low? Going higher or lower? So I think yes, this is the stay-at-home mom thing to know what thing. Okay, yeah, hit already lah. But I didn't really focus so much on that because I think that is like not the kind of indicator that I'm looking at. Yes, there is, but I didn't really research into that. Okay, going higher, right? So, I think that's the reason why I think that the Fed, it is a little bit concerned. Okay, a little bit concerned. So, because there's an unemployment rate is going higher. So, I think that if you guys study economy 101, you should know that, when there's a high unemployment rate, okay, people lose their job, they have no money to spend. No money to spend means they cannot buy a lot of things. Cannot buy a lot of things means that all these businesses that produces all these materials thing for the people will have lower profit. Okay, lower profit, they're not making money. Not making money means that, okay, they need to do retrenchment. Retrenchment means that people lose their job. Okay, people lose their job, meaning that they have no money to spend. So it's like a negative feedback loop. Okay, so it is not, if the Fed did not control properly, okay, then it will spiral into really into a recession, that kind of thing. Can you understand, right? The simple logic of, people lose their job, unemployment rate and all this, right? So simple. So this is why I think that, the Fed have maybe some hint that the market, it is not so looking so good. That's the reason why they already said it, and okay, I'm looking to cut the interest rate now to stimulate the economy. Okay, and of course, right now the interest rate, it is at a high of 5%. Okay, so they still have a lot of so-called bullets. Okay, to stimulate the economy. So the number one way, okay, is the to reduce the interest rate. Okay, keep reducing so that to stir the economy up higher, to reduce the borrowing cost and such. Okay, I hope all these make sense to you. So the thing that I'm looking at is actually the unemployment rate. Okay, so again, okay, let's assume that, okay, that the unemployment rate really goes higher and the market really go into recession. I don't know when. Okay, again, nobody can tell you when is the actual recession. Okay, the moment when somebody can effectively tells you when the recession is coming, it means that the recession will not come. When everybody is talking about that, okay. So when people are not talking about it, then you should be a little bit more wary. So I hope you can get the drift. Okay. Oh, by the way, I forgot to mention to you guys. So all this data from the St. Louis Fed, okay, this data from this side, St. Louis Fed, you can actually get it from trading view as well. So the thing that you need to take note, okay, it is actually here. Can you see that over here? I try to zoom in. All right, Fed Fund. Can you see? This is the ticker. Okay, Fed Fund. All right. So if you actually go to trading view, if you just search Fed Fund, okay, this is the Fed Fund. All right. So I can remove all these indicator. Okay. So can you see? All right, this is the Fed fund, exactly the chart. Okay, so this is the Fed fund rate, okay, when they start to reduce the interest rate and such, okay, went out at 5+%. All right, and then, all right, you can actually add in the unemployment rate. Not unemployment rate, sorry, it is the, what's that? The recession, okay, the recession, the gray shaded area over here, the gray shaded area. So you go to the recession, you just search, okay, search REC, okay, recession. Sorry, I forget the ticker. Yeah, it is USREC. Sorry, USREC. Okay, USREC. Okay, so this is the NABE-based recession indicator for the United States. All right, so the NABE-based recession indicator. So if you add, oops, sorry, should click the plus button. Okay, and then you type USREC. All right, and then you put same scale. Okay, then you can see that these are the period where there is a recession over there. Can you see this period? Can see, I hope you guys can see this period, recession. Okay, so this is how you can use it on the trading view chart as well. Okay, and then actually I shared one to some of the members also actually when I met Henry. Okay, so some of them talking about this 10 years minus 2 year EU, right, whether it's crossing above, is uninverted again. So you can use this ticker symbol, okay, which is, okay, T10Y2Y, all right, T10Y2Y. Okay, T10Y2Y over there. Okay, the 10 years, yeah, the T10Y2Y, the 10 years treasury constant minus 2 year. So you can search it on trading view. I posted the ticker symbol there. So you can see that, you know, it is like crossing back to above zero again. Typically, you know, this is something that a lot of people are watching this also. Like, you know, when it cross above zero, okay, which means that the yield curve is uninverted again, okay. All right. Typically, following that, there will be some recession. But again, a lot of people are watching this. So these are not maybe not so crucial. But the thing, as I mentioned, right, it is the unemployment rate that I'm actually looking at. Okay, that is could be more significant in my opinion. Okay, so this is, but again, this is something how we can add it into your trading view. So do you learn something new? I think I mentioned this. I think, I don't know, some time ago, many months or many 1 or 2 years ago. So if you learn something new, okay, just type new in the comments. Okay, so you can add into trading view. Okay, or if you find this is something new to you, just type new in the comments. All right, so yeah, and so as I said, right, so what would actually happen, okay, if there is a recession? So if the recession really comes, okay, what would happen? Oh, by the way, right now we got more than 200 people, okay, in this live stream already. Please give me a like or share if you're watching this on YouTube. Please give me a like and subscribe to our YouTube channel. If you are watching this on Facebook, give me a like, share as well. Okay, by the way, for those who just joined, okay, I just want to repeat, okay, I don't do this webinar often. So on Thursday, 29th of August, I will be doing a webinar on the unlock the power of seasonal trend for consistent trading success. Okay, so I'll post the link in the comments on Thursday at 7:30 p.m. So this is going to talk about using seasonal trend, okay, to achieve a more consistent trading profits. Okay, right. So what are seasonal trends? For those who don't know or new to MarketWise Asia, they are predictable patterns in the financial market. They tends to occur every single year. Okay, and by analyzing this historical data, you can identify the trend and make smarter trading decisions. So during this 1.5 hour webinar, I will share with you how to harness the seasonal pattern for profitable trade, how to make confident decision, all right, with data-driven insights, and how to outsmart the market condition with predictive strategies, plus a lot of case studies, trade ideas, and knowledge you can take away. All right, so this is not just a whole way, all the way pitching. Okay, there will be information for you to learn as well and case study. So here I go. I'll post the link in the comments. So do register for this webinar at this coming Thursday. All right. So back to over there. So let's see the market performance during the recession. I think maybe, I don't know, 1 or 2 years ago, I actually shared this website again. Okay. Right now, going to reshare again. I'll post the link in the comments. So recession, okay. What happened during recession? Does the market actually go down or actually go up? All right. So you actually can read this. I can see that over there, right? During a recession, how do they define recession? Blah 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 blah. Okay, it is determined by the NABE, the National Bureau of Economic Research. All right. So plus the UCAS, these are not the things I'm going to share with you. Okay, the key thing is, okay, all right, what a recession look like. Okay, so at the 0% mark is when the NABE actually announced the recession. The 0% mark is when NABE announced. So at the start, okay, when the NABE announced recession, this is the start. So it's a 0%, okay, at the start. So you can see that during the official recession, when the so-called the NABE announced, right, a lot of times the market actually do go down. Maybe you can't really see a lot of lines, but all in all, the market actually do go down. Okay, do go down. So you can see that this is a summary. All right. All right. Most recession have a period of significant stock market drop shortly after the recession begin. Okay, and I think what that you guys know. Okay, recession are typically very short term. Okay, all right. Most recession last less than a year. In fact, only of the 3 of the 11 recession since 1950 went on for more than a year. I think the key thing is you guys need to know, right, is, okay, every single session, the stock market is recovering by the time the recession ends. Okay, which means that, okay, the stock market will recover, okay, before the NABE say that recession has officially ended. By the time, all right, you're thinking of going into the stock market only when NABE say that recession has ended, you are a little bit too late already. Okay, so you can see over there. Okay, so before I go into the chart over there, you can see that, okay, at this point in time when all these things end, okay, when all the recession end, it is when they end, as in they stop over there at the end of the number over there. This is where the recession ends. But can you see some pattern or not? Okay, can you see some pattern? Okay, before the recession officially ended, okay, the recession officially ended here, right? I mean, this is something that is easier to see. Can you see that at some point in time, okay, before the recession officially ended, the market started to recover already. Can you see? The recession ended over there, right? Okay, took about 480 days in 1973. Okay, but the market did not recover when they say it is ended. Okay, they recover way before the recession ended. Can you see over there? It started to recover. Of course, in the most recent one, it is the 2008 global financial crisis. Okay, it ended over there. The market recovered way before it says it ended. Can see or not? Can see? Okay, just type once again. Just type okay, yes lah. Simple as that. Just type Y in the comments. Can see? Okay, so a lot of time recession are very short-lived. You can see that recession are very short-lived. Here. Okay, typically, less than a year. Less than a year means less than 365 days. Okay, so once again, recession ended. Okay, way before that, okay, the market recover already. Okay, all right. So this is what the chart is typically saying. So on average, this is how the market will move. So typically, when NABE announced a confirmed recession, the market typically have some drawdown. Can you see this black dotted line over there? Okay, all right. But before the market, okay, before Nabe said that the recession has officially ended, okay, the market tends to recover a lot earlier than that, okay? So the market can recover. So this is time where the market, when the economy, okay, so-called the recession is less than a year. Sorry, my cursor is a bit lagging. So it tends to drop during the recession, but before it officially ended, okay, the market tends to recover already. Okay, is this something new to you guys? If you learn something new, okay, once again, okay, just type letter N in the comments if you learn something new on this, okay? So you know, you can anticipate what could happen. So prepare yourself what could happen. Again, I'm not asking you to predict, okay, what the market will do, but at least you have a roadmap, okay, thinking what the market could do so that you don't get caught by surprise. Oh, suddenly, wow, the market dropped, another recession, the market dropped, then you kind of panic. But this is expected, right? Okay, I already share with you typically what the market will do, okay, before recession, during recession, and just before the market ended the recession. So you have some anticipation. You can anticipate what the market will do, right? So it's not going to be a surprise to you guys. All right. So once again, this is again, nobody can predict what the market will do. Okay, whether the economy will have a recession or not. Okay, it is still too early lah. Again, when the Fed cut interest rate to maybe there could be a real recession, there is some lag time. But meanwhile, okay, what you can actually do, okay, is to focus on the chart right now. Okay, let me go to the chart. Okay, to the chart. Let me go to this. Okay, and then go back to the S&P 500. Okay. Yeah. So today I actually shared this to my insiders. Okay. All right. So the gamma level, it is at about 5,005 level. 5,005 level. You guys can just type 5500 okay, which means that when price is still above the zero gamma level, okay, then the market is still going to be stable. This is based on the options dealer. They are hedging, the options hedging, okay, their position, okay. They are either net positive gamma or net negative gamma. So above 5,005, okay, the market is still pretty stable. If price can go below 5,005, then there could be an increase in volatility. There could be increase in volatility, and there could be more downside to go. Okay, so prior to that, okay, you know, I said that, you know, there are a few scenarios that could pan out. Okay, and one of the scenario is that actually, you know, market, you know, could come down, do some correction, and go back up again. So the scenario that I did not really expected it to happen, even though I anticipate that it could happen, it is actually this V-shaped recovery. So I actually did not really expect that the market will do a V-shaped recovery. But you know, the election year, the market is really, really very bullish. Okay, it caught me by surprise, and some of the so-called previous 1-2 week, I actually shorted some of the stocks. There is some losing position, but again, all is well because okay, some of this losing position is only within the past 1 to 2 weeks, but prior to that, okay, many are all within trades. So net, okay, I'm still, you know, positive. So there's no worries on that, okay. But you know, I'm just going to tell you that, okay, if I got it wrong, okay, there'll be losing trade. It is part and parcel of trading. It is very similar at the start of January when I kind of anticipate that there could be some correction, but it did not. Price continue to go higher. Okay, so there was some drawdown, but subsequently, okay, recovered very well because subsequently all the trade are all pretty nicely done and profitable as well. So very similar to January. All right, so yeah, so this is the 5,005 level. So okay, I just want to let you guys know that, okay, can the market can continue to go higher or not? Okay, what do you all think? All right, so my personal view, let me add in my usual chart. Okay, this thing, cloud and the pivot point indicator. Okay, I just want to let you know that the S&P 500, okay, there is a potential reversal star signal right now. Okay. All right. And then the NASDAQ, there is also a potential star reversal signal right now. Okay. You can see that for the NASDAQ, all right, price also resisted at the central pivot range and somehow it gets stuck at that central pivot range level. Okay. For the Russell 2000, okay, I think today there is a star reversal signal. It should appear today, which means that there's a potential that price could go down. Okay, but again, it doesn't mean that price has to go down. Just that price, get stuck at the resistance level there, price to consolidate or go down a little bit or go down a lot. We never know. We don't know the magnitude of the correction, or it could just range, or it could have some pullback. Again, it's not 100% accurate. Nothing is 100% sure. Just that potentially you need to be more mindful, be more careful. Okay. All right. So yeah. So at this point in time, okay, I wouldn't aggressively go and buy the stock right now. Okay. At this point in time, I also wouldn't aggressively go and short the market right now. Dow Jones, I didn't really go and check it out. I don't want to see it now because once I see you guys, you will see. So I don't want to check it right now, but I didn't really check it out. But I think a few of the key indices show is good enough. Okay, so to me, it's like, okay, at this moment in time, I will still stick on to a few of my current position. I'm still holding on. Okay, they are still either in profit or haven't got stop out yet. Okay, some are losing trade but haven't got stop out yet. Some are winning trade, haven't take profit yet. Okay, so I at this moment in time, okay, to be really, really honest, okay, I am not so sure. Okay, so at this point in time, okay, like they always say, there's time to buy, there's time to sell, and there's some time to go fishing. Like like Warren Buffett kind of, they always say, right? So at this point in time, to me, it's like maybe I should go fishing. I'm a little bit unsure because if you ask me to buy right now, okay, it's not the best time to buy lah. Market really rally so high. I don't buy here. I bought some over there initially. Okay, take some profit already. Okay, but right now ask me to buy a bit pie it's at the high Okay, I would prefer if market could have some correction. But again, also wouldn't want to short because typically based on historical data, late August to early September, it tends to historically the market tends to go higher as well. So we can see that for today, even though the key indices, it is dropping like the S&P and the NASDAQ 100 is dropping out, okay? You see the RSP, okay, the equal weight 500, it is actually positive. The mid cap, small cap, they are still generally positive as well. So the market underneath the surface, it is actually not that weak also. Okay, all right. So can I just be very transparent with you guys that there are times that I'm unsure. So when I'm unsure, okay, all right, so I don't trade lah. So I tend to start it first, hold back first, okay, all right. So hold it first, I can choose not to trade, okay, right. This is just trying to be being a real trader to you lah, okay, all right. If you understand what I'm trying to say, just type T. I'm trying to be transparent, to be a real trader to you. There are some rules out there, they tends to seem that they know everything. To have the facade that you oh no, I know everything. The market is going to go up, the market is going to go down. But yeah, I'm also a normal human being. At this point in time, I'm a bit really unsure. So I tend to hold back first. I can choose not to trade lah. Okay, all right. So but prior to that, okay, to my seasonal vantage insiders, okay, the past 1 to 2 weeks, okay, not so good. To be really honest with you guys, not so good. They are losing trade, okay. But okay, prior to that are mostly winning trades. Okay, so 1 to 2 weeks doesn't determine the whole year. Okay, all right, this is part and parcel of trading. So just to showcase, okay, some case study like previously, all right, I mentioned about this SYY. Okay, so SYY, it is inside this seasonal recently. Just now I just shared to the I just asked them in this Telegram group, okay, whether some of them are still holding SYY or not, okay. Like for example, Machik, okay, it says so SYY for some profit, took nice profit on end NASDAQ as well. Okay, NDAQ. Okay, NDAQ. All right, so yeah, some of the things over there. So you can see that for Cisco, eventually it went higher. Oops, eventually it went higher. When I first mentioned, it was somewhere around here. When I first mentioned, it was somewhere around here. So it go higher. Okay, previously NDAQ. Okay, it was when I first mentioned, it was somewhere around here as well. So go higher. So there are also a few positions that I have shorted. I have shorted. Okay, so I don't mind sharing a view because if you enter now, it is too late for you already. So the one that I shorted is Hologics. Okay. All right, so this is actually a health technology stock, health stocks. Okay, when I first mentioned to the SVI members, it was somewhere around here. Okay, somewhere around here. So it took some time. Okay, come down. So at this moment in time, I have at least 1R profit. Okay, so these are some of the things I mentioned to the seasonal fund insiders. Okay, all right. So again, if you want to know more how I trade, okay, to be a profitable trader, I encourage you to join this webinar that is this coming Thursday. All right, unlock the power of seasonal trend for consistent trading success, 29th of August at 7:30 p.m. I'll post the link in the comments over here. All right, so all in all, what I'm trying to tell you that short-term wise, S&P 500, we are at a high. So there is a star reversal signal showing up. So I wouldn't aggressively going long right now. Okay, so I'll take a wait and see approach. Again, just now I mentioned, right, this is September, October. You need to be more mindful of the market condition based on historical data. It tends to be a negative month in September and October. Clear so far? If you think everything is good, clear, all right, okay, all right, just give me a like, okay, at least give me some support if you learn something new, you like the content, okay, if you like content, okay, just type once again, just type yes, okay. I think today's the most common thing that you type is letter Y. So if you learn something new today, just type Y, okay, you understand what I'm trying to say about the market. I'm not too sure about the market, that kind, okay, just type yes in the comments, okay. Will the 29th October recorded in the SBI? Okay, I can put it, no issues on that. But a lot of these things, okay, I already shared to the current SBI members already. But in the near future, I think within the next 1 month or so, I will do a exclusive webinar for the insiders as well. Okay? Any other question? Any other question? General question. If you're talking about stocks, I can share. Okay, let me try about. I prefer not to share individual stocks. Okay, because like, let me take a look at NVIDIA first. Okay, so as of now, nothing much to talk. Because NVIDIA is at the market. Okay, NVIDIA is at the market. Okay, NVIDIA is at the market. Okay, come down near the high there at the top, consolidating. Okay, all right, there's a star reversal signal, that kind. So yeah, at this point in time, I wouldn't be trying to long all this big company stock right now. Okay. Wailam. Okay, Wailam, do you actually check the insiders area? All right. I actually posted in the members area the seasonal trend for crypto until certain months. Then maybe you can take a look. As of now, okay, if you're talking about price action wise and also the seasonality, okay, it is not in favor yet. Okay, not in favor yet. So I still think can target a little bit. Okay, for the actual month, okay, I won't review that to the public. Okay, all right, you can revert back to the members area and take a look. I think just recent posts only, recent 2 or 3 posts. Just scroll through, you'll be able to find under the PTC. All right. Teh tarik. I just came back from Bangkok. I like the Bangkok Thai iced tea. Okay. By the way, I go to Bangkok. The Thai iced tea, I typically choose 30% and 0% sugar. Yeah. So 0% 有它的好喝. Okay, it's that you can really feel the tea. If you want something that's nicer a little bit, okay, 30% is just nice. Okay, I'm just sharing with you. And in Singapore, there's this cha chu, right? The Thai iced tea, right? Okay, you can also choose the sugar level. I'm getting older already. I cannot get 100% kind of sugar level. I think I need to cut off my leg. Diabetes overdose. Any rumor that Telegram will be demolished? And no, I don't think so lah. I don't think so. Where do you heard it from? I don't think so lah. Okay, all right. So Joshua, can look at GLD from a seasonal perspective. Okay, from the seasonal perspective, okay, actually gold. In fact, I told my seasonal market insiders, gold is actually not so good in the coming so-called since last week or so. In fact, before I go for the Market Insights Trading Festival, I already said that, gold miners are not so good, okay? But the market continue to actually, for example, the gold futures are continue to grind higher, okay? So no action taken, no action taken. So I don't want to go against the trend. So gold miners, no action taken. So when I first mentioned that, okay, I think 2 weeks ago, it was supposed to be bearish, but no action taken, continue to go higher. But okay, but here, all right, there was some price action trigger over here. There's some price action trigger over there. So for me personally, okay, I think I shared to the members today. I shared with the members today. So is it over here? Yeah, I actually did. Okay, I don't mind sharing. Okay, I could be wrong. I could be wrong. I could lose money. I'm just sharing with you what I do. Okay, I actually sell a vertical call options on gold futures. Okay, all right, gold futures. I can see that /GC. This is gold futures. This is not the ETF. Okay, I mean that maybe you guys don't trade the futures options now, but I'm just showing you what I do. So I am actually bearish on gold right now and gold miners and such lah. Okay, yeah, I shorted it in a way that I expressed the short trade via options. Okay, so you can see that, I sold a call options at 2620. I bought higher level, okay, at 2630. So per contract, it is $1.30 credit. So it's 2 contract. So this is a bit different from the like stocks and ETF, where one contract of the stock and ETF, it is actually 100 shares. So for futures options, 1 contract means 1 contract, 2 contracts means 2 contract. Okay, all right. So I did that. So there are a few ways that things could pan out. Okay, if I can see that 2620 is quite high there. So for the reason why I like to sell options on futures options, it is because I can sell pretty far away OTM out of the money. I still can get very decent premium. Okay, so the delta I actually sold, it is actually about, I think, 10 to 15 delta only, quite far away, and 30 days DTE. So the market can do a few things. Okay, the market can go down, I make money because the options decay because I sold options. The market don't do anything, just range. At the end of the day, I also make money. Okay, the market can just go a little bit higher. Okay, slow moving upward. Okay, I still can make money as long as within the 30 days it expire worthless. I still make money. The thing that it should not do is that suddenly market just chong higher up like that. Then I'll lose money. Then I have to exit and close my position. Okay, all right. So for those who don't know about options, never mind. This is just something sharing with you guys. This additional information. So I'm walking the talk. Okay, all right. So of course, for any trade, there's a risk involved. You need to manage the risk. Okay, if I'm wrong, I will just exit. Nothing big deal. No big deal. Okay. All right, no big deal. So in this case, we went up despite bearish. Yeah, so at this point in time, the price actions still prevail, Joshua. So even though I use seasonal, okay, seasonal is just like a tool for me to use, but I still need to look at the price action. Okay, all right. What I'm saying is asking that the middle wall seems to be worsening, might be the reason. Yes, for the past 1 to 2 weeks, it seems to be the reason. But But it seems to me that the precious metal, the gold, it is a little bit too crowded. Because if you look at website, you look at social media, a lot of people are talking about gold, go higher. So I think it's a little bit too crowded. When the market is a little bit too crowded, I think you need to be a bit wary. It doesn't mean that the market cannot go higher. Okay, in the long run, it can still go higher. But I think maybe in the short term, within the next 1 or 2 months, there could be some correction before it go higher. But again, what you do within the next 6 months or 1 year, it doesn't matter to me because I'm a relatively shorter term trader. Okay. Ken, any questions so far? I think just nice 1 hour so far. Just nice 1 hour. So if you learn something from me from this session, okay, you think it's good content, all right, just type value in the comments. There's nothing bad if you want to use on ETF and on stocks as well. Just that if you trade using stocks and ETF options, you cannot sell too far away from the current price. If you sell too far away, your premium is kacang putih, very little only. But for options future, you can sell far away and you still can get decent premium. Okay. All right. So yeah, if you like my session, just give me a like, share, or comments. Watching on this YouTube, give me a like, share, and subscribe to our YouTube channel. Once again, all right. This Thursday, if you are new to MarketWise Asia, if you are new to Alex, that's me. If you are new to seasonal trend, if you are new to seasonality, okay, do attend this webinar. Unlock the power of seasonal trend for consistent trading success. Okay, on the 29th of August, this coming Thursday. I'll post the link in the comments once again. All right. So, as mentioned, last but not least, okay, there are predictable patterns that happens every single year. So you want to take advantage of that. So during this discovery webinar, you'll learn how to harness the seasonal pattern for profitable trade, make confident decision, okay, and also outsmart the market condition, plus a lot of case study, trade ideas, and knowledge you can take away. All right, so once again, thank you so much for tuning in. Thanks, Mary. Okay, so I think I'll end the session. Just nice 1 hour. I hope you learned something new. So for those who are new to seasonal trends, I hope to see you this coming Thursday. So with that, thanks so much, and I will see you guys again next week for the live. This Thursday for the seasonal trends webinar. Okay, thanks and good night and bye-bye.